The best of Money Matters. Market View on Money FM 89.3.
Hi, I'm Willie Keng. You are listening to Money FM 89.3, and it's now time for Market View, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and companies to watch. But first, a quick recap of how we started the day. Singapore stocks opened higher this morning on the back of a rally across Asia-Pacific markets. Now, the Trump administration has said it is kicking off investigations into pharmaceuticals and semiconductors product imports as it gauges whether to impose tariffs on these sectors. This comes as US President Donald Trump said earlier he will potentially pause auto tariffs, providing further relief after the tech levy exemption. Meanwhile, Hong Kong's Hang Seng Tech Index bucked the positive trend by falling over 1% during midday and closed lower by 0.6% after 5 straight sessions of gains. Now, luxury giant LVMH has recently reported its first quarter revenue that fell short of expectations as US shoppers reined in spending on beauty products and demand in China remained weak. So, what does all this mean for investors? With that, let's unpack all of these developments with Dan Chang, investment specialist and trading representative at Phillip Capital. Welcome to the show, Dan.
Hey, hi, Willie. Happy Tuesday.
Yeah, happy Tuesday and a great afternoon. Let's dive in straight into the local stock market then. How has the STI fared so far today, and who are the biggest movers and any surprises that got your attention?
Well, I guess a lot of investors are signing a sign of relief. Relative to the last 2 weeks, right, the market sentiment this week was definitely much better, I would say. Just at the end of March, right, we were still trading that, STI broke above the 4,000 mark for the first time in history. But in the last 2 weeks, we have seen that the index has plunged over more than 15%, hitting a low of 3,372 points before they find some footings and rebounding. So every day, right, we are seeing huge swing in the STI daily close. And a lot of these volatilities actually came from the back and forth developments surrounding these Trump's tariff. Initially, right, the implementation rattles the markets, but sentiment shift when the US announced that there's a 90 days pause on these imposing full tariff on most of its trading partners, on smartphone, computers, and some electronic items.
Right.
And this week, we have seen the STI bounce back in a very good way. And Monday, we see the market kicking off with a decent gain of 1%. And today, it's just an extension of that momentum, climbing another 2%. So all in, right, there's about a 3% recovery from last Friday close of 3,512 points to 3,624 points. And with regards to who is the biggest mover, well, when STI make a big move, right, it's usually the heavyweights counter that lead the charge.
Yeah.
And this time was no different. So the 3 local banks, which are STI heavyweight, mirror the STI sharp swings, showing significantly high volatility over the past 2 weeks. And for today, right, or rather for these 2 days, they were significant gainers as well. So there's no surprise there. But there was a little bit of surprise at Singtel. So while the broader market, right, was under pressure in the last 2 weeks, Singtel not only held its ground, it actually trend up. Okay, and today is up another 2% to close at $3.57. And I would say that resilience definitely stood out for me. And another standout name was Olam Group, okay, this week. So on Monday, right, before the market opened, they gave an update on their reorganization plan. They aim to become debt-free and to inject another $500 million into their subsidiary, the OFI Group. And they are also saying that they are gradually going to divest some of their assets to return some value to shareholders. And it seems like the market clearly liked what they hear. And Olam's share has jumped from 85 cents to 91 cents, which is a good 7% gain in the last 2 days.
I just want to get your thoughts here then on Olam. Since you were sharing on this, do you think the commodity companies like Olam, Wilmar, First Resources in Singapore, do you think they will get impacted by the tariffs here by Trump?
Well, I'm sure in one way or another, the tariff is sort of a global thing. So naturally, they would be affected, but it's just that how they are going to to hedge against tariff and to try to circumvent it. Of course, as Trump has said himself, he's going to start negotiation with different countries over these 90 days and to see if there's any compromise. I think the impact of tariffs on all these commodity companies will very much depend on what was being agreed between Trump and all these different countries.
Right. Now, speaking of countries, let's move into the region here in China. Chinese battery maker giant Contemporary Amperex Technology, or CATL, recently reported a 33% jump in its first quarter earnings. I mean, it bucked the trend of a slowdown in demand for EVs and also the fall in prices of the cells that power them. I mean, I just want to get your views here on its latest earnings results. And do you think that there are any impact coming from tariffs itself as well?
Well, I'm sure that there should be some impact, but I have to say that the CATL really kicked off 2025 on a strong note.
Yeah.
The 33% surge in net income, in 1Q net income, was actually his fastest growth in nearly 2 years. And his revenue also saw a 6.2 increase, which is a break from the past 5 quarters streak of declines. So it's like a turnaround here. And the rebound, right, was mainly driven by improved cost efficiency. So despite a slowdown in global EV demand and falling batteries prices, right, CATL actually leveraged its scale to maintain the margins through all these cost efficiencies. But however, right, as you mentioned just now, right, the tariff, right, the outlook isn't without headwinds. Okay, tariff concerns, and one more thing to note is the restriction under this Inflation Reduction Act, which is an act introduced during the Biden administration. We seek to curb dependence on foreign entities that are considered both a potential national security risk. So these are Inflation Reduction Act and these tariff concerns all pose serious challenge to CATL global ambition, particularly in the US market. So even though it is already the world's largest EV battery maker, its exposure to all these geopolitical tension, right, remain a critical risk. And I think to stay ahead of this challenge, right, I think CATL also have been doing something. They have been proactively licensing its technology abroad.
Yes.
They has been expanding their R&D, and they have been building production hubs in Europe, like countries like Germany and Hungary. And they are also diversifying their material sourcing to avoid over-reliance to any one single country or one single region. And in parallel, right, CATL is also pushing ahead with a Hong Kong second listing, aiming to raise over US $5 billion. I think it's a strategic move to gain more visibility on the global stage and to fuel more global expansion.
Right. I mean, shares are down 30% year to date. Goldman Sachs has also trimmed CATL's income forecast through 2027. And also there are some gross profit headwinds ahead. Then, just some follow-up here. What do you think investors want to be looking at to see a meaningful potential recovery, if we must say, in the share price?
Okay, I think for the past, I would say for the past 3 weeks, right, macroeconomic condition has override a lot of so-called company-specific news because, ultimately company performance is hinged on the macroeconomic news. So before we see a turnaround on all these individual companies, right, we have to really have some visibility into these macroeconomics, and we need that to happen when US President Trump is able to give us a very clear path on what he's going to do and how he's going to do it. Yeah, without that, right, I think the visibility will be low on the individual company level. Right.
Now, moving ahead of the region, let's move into luxury. Luxury giant LVMH shares recently dropped after the luxury group published weaker than expected sales from sluggish demand for its high-end goods in China and also from the potential threat of a trade war. It has recently announced its sales falls. Can I get your views here on LVMH then?
Yeah, sure. I think LVMH is, as you have just mentioned, is not really looking very good. And I think their result is definitely a reality check on the luxury sector. Okay, a 5% drop in their flagship fashion and leather goods unit is actually far worse than some of the analysts have expected. And that signals more than just one bad season. It's a sign that demand, particularly from China and US, is softer than ever before. In China, right, I think the high-end consumption has yet to fully rebound post-COVID. It's rebound by a slower economic recovery and cautious consumer sentiment. And over in the US, right, LVMH, the attraction of the luxury goods of this LVMH, right, is facing a lot of headwinds from both tariff and shifting spending patterns. With shoppers now choosing to push more on, the buying experience rather than the designer's labor. And talking about tariff, right, of course, we also have the looming tariff tension. You know, we have mentioned before, Trump's trade tactics has seemingly hurt the consumer goods sectors badly. The 10% tariff on EU imports, which was temporary pause from a bigger hit, has thrown brands like LVMH into uncharted water. They have never faced this situation before. Okay, and as you mentioned, right, I think there is also these. If you look at the TikTok, right, there's a lot of Chinese manufacturers trying to undercut them on TikTok and saying that, you know, their products are actually being produced in China and things like that. And this will actually undermine all these LVMH and all these luxury goods reputation. Of course, I mean, there are camps on both sides. I mean, there are some who say that, you know, luxury good is a form of status, so I don't mind. But there are also a lot of consumers who must be wondering if they have been overpaying for the logo on these luxury goods.
Right.
So I would say that definitely it's a rough time now for the luxury goods company.
Now, speaking of luxury, one more question before we let you go, Dan. So what's on your radar for the week?
Well, this week we have holiday shortened week, so we only have 2 more days left. Macroeconomics has thus far been dictating the market direction rather than, you know, individual company-specific news, as I mentioned earlier. And it seems to be so for the rest of the week. And from a very defensive and conservative point of view, right, aside from Singtel, which I mentioned earlier, there are some stock that has already shown some resilience the last 2 weeks. They did drop in the last week, but the drop is relatively, I would say, acceptable or mild, and the rebound was strong. They are ST Engine and SGX. And of course, you know, when market is uncertain, investors will usually go for safe haven. So gold ETF is also on my radar for the week.
We have been speaking with Dan Chang, investment specialist and trading representative at Phillip Capital. Thank you so much for your insights, Dan.
Thank you, Willie. Thank you.
Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.